Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Quinny. Good evening. Today is Monday, December 22nd. I'm analyst Jang Da, 3 semesters. Remember to like, subscribe, and share for us. If you have any investment questions, feel free to leave a comment. If I don't have time to answer today, I'll respond to you in tomorrow's class if it's meaningful. And very soon, with just 8 days left, we'll be welcoming 2026. So this week, I'll be doing live streams with everyone. Next week, even though I won't be live streaming, our Quinny program will still go live as long as the US stock market is open. Also, just a reminder, on December 25th, Christmas Day, our show will take a one-day break. We'll be pausing for one day. But no matter what questions you have, big or small, feel free to leave me a message. All right, everyone, good night. Hello, everyone. Another week has gone by. Last week, I mentioned that in November and December, I had a lot of annual leave to go out and travel, right? I'll tell you in a bit where I went last week, and I'll share that with you all later. Okay, good evening, everyone. For those joining us online, if you're here, please remember to give us a like, share the stream, and say hi to us. All right, good evening to Hui Hui Zhuan, and good night to Mei Daizi, Fei Deyu, Kei Coco Lee, and who else? Joplin, hello. Good evening to Yulunga as well, and Anna Ya, and Alice Fu. Good evening, good evening. And first, let's see. Oh, this should be Shui. Okay, let's get started. Tonight, let's focus on investment highlights and review what kind of content we have. Okay, Lu Yang, good evening, good evening, good evening. Now, about Warvoha. Trump is fighting for the election, but what does Warvoha mean? Warvoha refers to, well, next year. It's very famous. Next year, the whole world will be watching the selection of the new Federal Reserve Chair. Right now, there are 3 main candidates. It started with 5, but now it's down to 3. These 3 are the current board member Waller, former board member Walsh, and economic advisor Hassett. So among these 3 candidates, who will actually be chosen in May next year? As for today, Trump has had some conversations with these candidates. The content of those talks was generally more dovish, but of course this information will also influence which of the 3 will be selected next year. I'll share more details with everyone in a bit. In addition, Trump is definitely going all out to prepare for next year's midterm elections, including efforts to lower inflation, reduce drug prices, and even proposing a lot of substantial campaign promises. So what kind of proposals were brought up today? Why do I say that the election heats up, many plans will be rolled out one after another next year? Of course, as these plans are introduced, they will generally be positive for the US stock market and the economy, and will be relatively favorable for US stocks. With such positive conditions, the midterm elections should be more advantageous. So how will it affect the polls? At the very least, it will somewhat boost the Republican Party in the polls. As for the industry side, let me add a bit about Wheater today. Some of you wrote it wrong. It's not Huter and it's not Intel. Wheater refers to NVIDIA plus Intel. As for Hyder, over this past weekend, there was actually a lot of related news, whether it was the loosening of export controls on the H20, or the fact that the FTC, the US Federal Trade Commission, approved NVIDIA's investment in Intel. So what impact do these 2 pieces of news have on NVIDIA right now, and how will they affect Intel's stock price? Let's make sure everyone understands this clearly. In addition, regarding earnings reports, the third quarter reports have all been released one after another, and now we're looking forward to the fourth quarter earnings. So what about the fourth quarter earnings? The upcoming investment opportunities include companies like Micron, FedEx, and Nike. As for Nike's earnings report, today I'll also share with you why even though Nike's third and fourth quarter earnings actually beat expectations, its stock price still plunged by 10%. What exactly happened? If you own Nike shares, or if you're just wearing Nike clothes or sneakers right now, this is something you'll want to know. How should we look at this? Tonight, during our content meeting, I'll make everything clear for everyone. Okay, so who's here? YIY, post 90s, Y90, good evening. And also TJT, Li Yi, good night, good night. Okay, first, let's take a look at the key investment highlights. There's no economic data today, no important data releases. Of course, in a bit, I'll fill you in on which day this week has the most important data coming out. I'll get into the details soon. Even though there's the Christmas holiday and the US stock market is, as we used to say. On Christmas Eve, the US stock market will close early at midnight. Then, on the 25th, the US stock market will be closed for the entire day. On the 26th, trading will basically return to normal. So during this period, even though this week is relatively uneventful and should be a peaceful week, there are not many major economic data releases. A lot of the data is just supplementary. Many reports that were not released before the US closed for the holidays are being moved to this week. From last week, we saw things like non-farm payrolls, the unemployment rate, CPI, and PCE. All of these have been released one after another, which means that from a retrospective look, from last week to this week, a lot of the data, especially regarding inflation, shows that things like CPI and PCE are currently not out of control. Whether it's the annual rate of CPI or the core annual rate, or even the 1-year and 5-year inflation expectations, they all indicate that inflation is not spiraling out of control. As for the unemployment rate and non-farm payrolls, although last week's November non-farm payrolls were above expectations, overall, whether it's initial jobless claims, the numbers for unemployment rates and other related indicators all show that the overall US job market is relatively weak. With a weak job market and inflation not out of control, as long as these two major factors remain stable and within the Fed's expectations, the Federal Reserve's dovish stance toward rate cuts next year is unlikely to change. So just keep this in mind for now, okay? All right, let me add something here. Milan Lisi is someone who is completely leaning towards Trump's side. He's definitely a dove. If we look back, Milan Lisi actually, in the last 2 rate decisions, he basically stood on the side of hoping for 2 rate cuts, a total of 0.5%. So in the previous 2 meetings, he was the one dissenting. But his dissent wasn't because he turned hawkish or didn't support rate cuts. He opposed because he thought 1 rate cut was too little. He wanted 2. So what he opposed was too few rate cuts? Okay, got it. So what about Ms. Mester? She continued to reiterate that there should be ongoing rate cuts to address employment risks. For example, as we mentioned earlier, the most recent US unemployment rate spiked to 4.6%. And as for non-farm payrolls, although the numbers look good and employment has increased, but with all these various adjustments, it's still like looking at flowers through the fog. We can't see things clearly. However, as the job market weakens, Ms. Mester still tends to support using rate cuts to help support the labor market. Now, take the third most important figure at the Fed, right? Besides the chair, vice chair, and the governors, the person we usually call the third-ranking official is Williams. Williams, of course, is a voting member with permanent voting rights. He said that he believes this recent drop in the CPI is just due to technical factors, though he didn't go into specifics. What kind of technical factors are we talking about? Is someone falsifying data or not? Or is it because of seasonal adjustments or monthly recalibrations? After the US government reopened, some of the economic data that came out, when you look at the compiled numbers, he feels there are technical issues with the data. No matter how he puts it, he just says that the CPI drop is due to technical factors. He believes there is no rush to adjust policy right now. On the other hand, another committee member named Harker is worried that inflation is still running high, so he leans toward keeping interest rates unchanged until next spring. So next spring would be around March. He can see that. These 3 committee members, their positions are actually quite different. One, Milan, strongly supports a significant rate cut. Williams takes a more neutral stance, while Harker is more on the hawkish side. So overall, whether it's the interest rate decision in January or the policy decisions in March and so on, it looks like the dovish and hawkish positions among the committee members haven't changed yet. There haven't been any adjustments. They're basically maintaining the same stance as in December of this year. Overall, I think the situation is still roughly 6-4, meaning about 60% of the committee members are more supportive of a dovish stance, while 40% are currently either on the sidelines or leaning more hawkish. That's the general trend right now. As for next year, with the variables of the US economy, inflation, and the ongoing tariff wars, how things will eventually turn out remains to be seen. As for monetary policy, we'll continue to track and update everyone on the developments. Alright, now about Hassett. Hassett is of course also a very important frontrunner for the position of Federal Reserve Chair. So what did Hassett say? He directly added today that the 3-month average inflation rate in the US is only 1.6%. That's really low, very low. So let's get a sense of how the Federal Reserve in the US views inflation. So what level do they consider as not spiking? Usually it's 2%. If it goes above 2% or even up to 3%, they see inflation as relatively high. But if there's a way to bring it down to 2%, for example, if data like our annual CPI or the core annual rate of PCE can drop close to 2%, then they believe inflation is cooling off. When inflation is cooling, of course, that benefits the Fed in making rate cuts. Now, as for Hassett's talk, he pointed out that the average monthly inflation, or rather the 3-month average, is only 1.6%, so he believes the Federal Reserve still has plenty of room to cut rates. Of course, both Hassett and Milan are relatively dovish. And finally, there's one more rather unique point. Let's talk about next year's candidates for Fed chair. Waller, these three people. Just yesterday, Trump once again praised someone named Waller. Waller is currently a Fed governor. As you know, one of the current governors is Waller. You might ask about Bowman. Well, it seems Bowman has reportedly been excluded. So as things stand, it's still the same, Waller. Back in June this year, at mid-year, I mentioned to everyone that Waller was a strong contender. And up to now, Waller still looks like the one with the best chance to win. So why did he praise Waller? He said the reason he praised Waller was first because he had a more in-depth interview with him. But more importantly, the reason Trump suddenly said Waller was pretty good is because last week, during a media interview, Waller specifically mentioned that the US economy is relatively stable right now. Inflation is not out of control, and the job market is rather lukewarm and weak. So he believes that at the current stage, with the current level of interest rates, the US still has a chance to cut interest rates by 0.5 to 1%. In other words, that's a rate cut of 2 to 4 basis points, which is quite a lot. So this argument is that there's still room to cut rates by 1%. This viewpoint actually aligns more closely with what both Mnuchin and Trump want, the Fed to take a more aggressive approach to rate cuts. So since Waller's stance matches this mindset, of course Trump is more supportive of Waller. So no matter what by next May, Powell will step down. And after Powell steps down, whether it's Waller, Warsh, or Hassett, whoever it ends up being, I don't think it really matters. Why? Because whoever gets chosen will be carrying out Trump's will, which is more dovish. So next year, if the Fed leans more dovish and is inclined to cut rates, then of course that's going to be more favorable for the economy and the stock market. And of course, the most important thing is the US midterm elections, which will also be held next November. It's the same with the elections in every country. Right before the election, they'll always roll out a lot of attractive economic policies. Plus, if they cut interest rates, and especially if they take more aggressive steps to lower rates, then the US economy and stock market will both benefit. Just wanted to give everyone a quick recap on that. Alright, just relying on this. Good evening, everyone. And also, who is this? FHSIN. Is that pronounced sh? Shishi. Good evening. Is it Young-an? And Marisa. Good evening, good evening. Now, is the Fed paying more attention to the unemployment rate or the CPI? Good question. Actually, they care more about the unemployment rate. Actually, when it comes to CPI, it should be put this way. The unemployment rate is mainly about looking at the job market. If the unemployment rate is too high, or if the non-farm payroll numbers are too low, then of course the Fed is more likely to cut interest rates. So rather than saying they focus on CPI or inflation, the Fed actually pays more attention to the annual rate of core PCE. The annual rate of core PCE is considered even a bit more important than CPI. Usually, when we look at things like CPI and PPI, in terms of importance, it goes PPI first, then CPI, and then PCE. Also, the annual rate is more significant than the monthly rate. When we talk about the annual rate, it means comparing to the same period last year, while the monthly rate compares to the previous month. And the core annual rate is more important than the non-core annual rate. So, what does core mean? It refers to excluding the volatile items like food and energy. That's why the annual rate of core PCE is even more important than CPI or PPI. So when we look at these inflation indicators, of course things like the US unemployment rate and non-farm payrolls are very important. They represent the job market, including weekly jobless claims, which also reflect employment conditions. But when it comes to inflation, I would suggest that besides focusing on CPI, you should also pay more attention to PCE, especially the core PCE data. Alright, that's the content regarding the officials' remarks. Lastly, let's mention Trump. Trump, of course, is actively doing a lot of things. Let's just say before the election, he does a lot, no matter if it's lowering prices, lowering the cost of goods, right? All to win over celebrities and earn votes, since the election is very competitive. So what about Trump? Today, he said that he has reached an agreement with 9 major pharmaceutical companies, that is, drug manufacturers, to significantly lower drug prices. This summer, he specifically named 17 pharmaceutical companies that must lower their drug prices to what level? To the lowest price in the world. In other words, drugs sold to the US must be at the global lowest price, and at the most favored nation price. Among these 17 companies he named, of course, there are American companies, European companies, Canadian companies, and companies from many other countries. Out of these, 14 have already agreed to lower their prices and offer the most favored nation pricing. That's really something remarkable, honestly. When Trump made his move, all the countries and all the companies could only just accept it, like just swallow it. Oh, I remember. Did you all see that news? At that time, Trump invited several big pharma bosses, like the chairman or CEOs of pharmaceutical companies, to the White House for a meeting. I remember Chen Jianbao mentioned this 2 months ago. Was it 2 or 3 months ago? Did you see that news? I'm not sure if it was on CNN or TBBS. Trump was there, and below they were signing agreements. He told pharmaceutical companies, your company needs to cut prices by 30%. yours by 50%, and you by 30%. They had to sign, right? They had to sign these agreements. But halfway through, what happened? The CEO of a big pharmaceutical company suddenly did something. He fainted, collapsed right there. Of course, they could only say he was dizzy, too tired, maybe low blood sugar, so he just fainted. So people joked maybe Trump set drug prices too low in those agreements, cutting prices by 30 or 50%. Pharmaceutical companies' profit margins slashed in half. Maybe this boss couldn't take it. His heart gave out, so he passed out. I think only Trump and the whole world would dare do something like this, really push it this far. So now, what about these 17 pharmaceutical companies? They had to lower their own prices even more, and of course, these 17 companies had to swallow that. In return, the condition they got was that the White House, the US, agreed not to impose any additional so-called tariffs on these pharmaceutical companies for 3 years. So basically, they traded price cuts for tariff relief. That's the overall deal. In addition, Trump also said he would require insurance companies to lower their prices. Okay, so insurance companies have to reduce premiums. And of course, if premiums go down, that could put some pressure on life insurance stocks and financial sector stocks. Then he said if insurance companies don't lower their prices, then they'll have to exit the insurance system. So you can imagine what Trump is doing right now. What he wants is that after finishing the tariff war, because once tariffs are imposed, the prices of many finished goods will probably go up and overall prices will rise. So when prices go up, yeah, that's not good for voters, and it doesn't help the Federal Reserve decide whether to cut interest rates. So you can see that they're trying to address this by gradually lowering prices and tariffs on everyday goods like coffee, oranges, and so on. Now they're getting involved in pharmaceuticals, telling drug companies to lower prices and insurance companies to reduce costs. What's the point? It's all about bringing prices down, hoping to win back public support and boost poll numbers. That's basically the direction they're heading in. So overall, I think whether it's these officials are relatively, maybe a bit more dovish, right? And the dovish stance hasn't changed at the moment. And then as for Trump, he's also constantly taking economic actions to boost his election prospects, right? So these things are all important hot topics that we need to combine and pay attention to by the end of this year. You really have to keep them in mind because these related issues might continue all the way into next year. They might keep going into next year. All right, so that's about the investment stance and the officials' related statements. Now, as for the timing, it's still at 4/16, and 2025 is actually coming up soon. So this rate cut is basically just something to take note of for now. Anyway, it's at 0.9 times right now, and next year we'll take another look together at the situation for 2026. Right now, looking at the latest data for 2026, actually it's for 2025 and 2026. So the expected rate cuts for next year are about 2 times, roughly 2 to 2.3 times. So after we get through next year, we'll update this chart again and keep tracking it together with everyone. All right, so what about the US dollar index? It dipped slightly by 0.6% and it's still staying below all 3 moving averages. The 25-day, 50-day, and 200-day moving averages are all pressing down on it. So with Trump being more aggressive and wanting to push for rate cuts, under this kind of stimulus, the dollar remains relatively weak in the short term. Anyway, it's relatively weak and fluctuating. Just wanted to add that for everyone. All right, now speaking of that, it's almost the end of the year, right? If you guys still haven't used up your annual leave, try to use it up as soon as possible. Because at some companies, if you don't use your annual leave, it's gone, and you might not even be able to exchange it for money. So if you can, do it. Now, honestly, there are less than 10 days, maybe half a month left until the end of the year. Time flies. 2025 will be here before you know it. Back in November, I scheduled mine. So I scheduled 5 days of annual leave. I originally wanted to travel abroad, but honestly, the ticket prices were just too high. During those 5 days of leave in November, didn't I share with you all that I went to Shito Forest and also hiked up Heihuan Mountain's East Peak? I finally made it to the top. So in November, I planned this so-called negative ion health hiking trip. As for December, of course, it's a bit more relaxed. In December, last week, since I didn't do a live stream, I took about 3 to 5 days off. I originally wanted to go to Japan, but it didn't fit my schedule, and tickets were too high. I changed plans. Last week, the weather was gloomy and cold. I spent 3 days, one in Sanxia, Taipei, Manyue Yuan Forest Recreation Area. It's nice, and the entrance fee is just 40 or 50 NT dollars. Not expensive. All right, once you go in, you can spend about half a day there, walking around and taking in the sights. It's a forest area with a high concentration of negative ions. And there are waterfalls, the Manyueman Waterfall and the Virgin Waterfall. If you ever have time, whether you live in Taipei or are just visiting, the Manyue Yuan Waterfall is easy to get to. You can go there, walk around, and check it out. I basically planned to spend a day at Manuilan, and then for the other 3 days, what did I do? Since the weather was cold, I went to Jiaoxi in Yilan to soak in the hot springs. I found a pretty nice hotel and stayed there for 3 days, just enjoying the hot springs and their spa facilities. But you know, after soaking in the hot springs, you'd think you'd feel really relaxed, right? But it just so happened that the hotel I picked this time, honestly, I really felt the price was a bit too high. The facilities weren't that great, and most importantly, the food was really bad. Right? So it didn't really feel completely relaxing. Of course, last week during those 5 days off, I spent some time going up the mountains, soaking in hot springs, and just taking it easy. Also, since it was Christmas, I went to Taipei's Ximi district and also to Banqiao, where there's the new Taipei Christmas land. I spent about 2 days wandering around, soaking up the Christmas atmosphere. So last week, since there was no live stream, my schedule is pretty freestyle, just relaxed, free, and honestly, kind of lazy. Alright, so whether you prefer that kind of lifestyle, like in November when we were constantly hiking, running around Xitou, Sanlingxi, Huang Mountain, just going everywhere, or if you prefer to just stay at home or in a hotel, eating, sleeping, and then when you wake up, just lazing around and scrolling on your phone. Either way is fine, no matter which type of person you are. And honestly, it doesn't matter whether your performance in 2025 was good or bad, it's all in the past. Let's look ahead to 2026. The new year is coming soon. So regardless of how your investments went, let's focus on the new year. If you have any investment questions, so whether you have any questions about US stocks, Taiwan stocks, or any other investment products, you're always welcome to leave us a comment. We hope that in this space, whether it's the You Want a Morning Call, Mr. Fan's show, or the You Want a Good Night program, no matter if it's about US stocks, Taiwan stocks, or international news, big or small, if any of it helps your investments, we really welcome everyone to interact with us more and share your thoughts and feedback with us. All right, so that was just sharing something that happened to me last week. Okay, everyone, let's keep moving and see what's next. As for geopolitical risks, let's talk a bit about Ukraine and the US. Anyway, the war in Ukraine is probably going to keep dragging on into next year, and right now, things are still at a stalemate. Even though the US and Ukraine have said that the new round of negotiations seems to be making progress, and they're hoping to hold so-called US-Ukraine trilateral talks, at this stage, it's still just talk and nothing concrete has happened yet. In addition, the EU is also looking at providing Ukraine with interest-free loans for weapons and other needs. Over the next 2 years, from 2025 to 2026, they're willing to offer Ukraine 90 billion euros in interest-free loans. As for the funds they're using, are they using the frozen Russian assets? No, they're not. So right now, the Russian central bank has hundreds of billions, whether in euros or dollars, frozen. And at the moment, the EU doesn't dare to use those funds either. Alright, so all they dare to do is provide loans to Ukraine. To be honest, even though these are interest-free loans, they still have to be repaid eventually, right? Yes, they will have to be repaid in the end. But when the war is over, how exactly will they pay back? That will definitely take a very, very long time. Some EU officials have said that after the war ends, they might demand war reparations from Russia. I think that's just wishful thinking. Do you really think you can make Russia cough up the money and pay reparations to Ukraine? I think that's just a fantasy. So right now, all they can do is provide loans. So they're giving loans to Ukraine this way. Out of the 27 member states, only 24 member states joined in. The other 3 countries do not support giving loans to Ukraine, and those are the Czech Republic, Hungary, and Slovakia. Why? Because they have closer ties with Russia. Their relationship is better. Anyway, the situation in Ukraine is still at a stalemate, but any progress is better than no progress at all. So let's keep watching next year. Since we're going to keep watching, there's also this Israeli official. Just take note of this. Israel said they might inform Trump about something. Maybe launch another attack on Iran. Just take note of this. In principle, that's my view. Next week is Christmas. It's pretty calm, with Christmas coming up at night, and then right after that it's New Year's, so I don't think there will be any major moves in these 2 weeks, because it's Christmas, and Christmas is a very important holiday in Western countries, just like how Lunar New Year is for Chinese communities in the East. So during the New Year period, basically no one really wants to start any conflicts or make any big moves, because that would be a loss of face for Trump as well. So I think if anything is going to happen, if any geopolitical risks are really going to heat up, it'll be next year. That's what all quiet on the Western Front means here. So before the end of this year, before December 31st, whether it's Middle Eastern countries or whether it's Hamas, Ukraine, or Russia, it's all just stuck there for now. And as for a trade war, that's not going to happen either. Anything about a trade war will have to wait until next year. So basically, whatever it is, everything will be pushed to next year. When they say next year, they really mean next year. For now, over these few days, everyone should just get their preparations done in advance. You need to be aware of what's happening internationally, pay attention to any global data, and be cautious about potential trade wars or unexpected changes in different countries that might come up next year and how you should respond. So over the next 8 days, just do a bit of homework. Take it easy, do some light preparation, and that'll be enough to handle the uncertainties of next year. As for oil prices, they're currently leaning bearish. Anyway, today there's a slight increase of 0.81%. But overall, the trend is still bearish. Now, regarding economic data, the economic data could hint at which hotel this is. It could give a clue about which hotel. That's possible too, right? But maybe everyone has a different feeling about hotels. Different impressions. Maybe during those 3 days I stayed at that hotel in Jiaoxi, I personally felt that the hotel in Jiaoxi, honestly, the room was really comfortable, super cozy. The amenities and equipment were great too. There was also a balcony and another room, plus an outdoor area, really spacious. The outdoor area was about 8 to 10 pings, with a private soaking hot spring pool, all within my own room. It was really nice. And inside my room, the bathroom even had a bathtub. So besides the bathtub, the balcony was huge, and there was a separate open-air hot spring tub on the balcony too. The fixed amenities were pretty good, yeah. I had pretty high expectations, so the in-room facilities were decent. But as for the hotel's additional facilities, like the spa equipment and the staff service, the quality of service, and especially the buffet food, I honestly thought the food was just terrible, really hard to eat. As for which hotel it is, you can check it out for yourselves. Maybe some of you have stayed there before. It's in Jiaoxi. It's called Zhongtian Hotel. Of course, everyone might have a different experience, since the hotel price is actually pretty high. Yeah, it's quite expensive. You can also check out some reviews. But I'm just sharing my personal experience, my own feelings this time. I think the room was nice, the facilities were average, but the service attitude was poor. So that's about it for the 15th floor. So if you ask me whether I'd stay there again next time I'm in Jiangxi, probably not. I'd probably look for another place. I'm just sharing this with everyone, just sharing my experience. Is the company where you work near Qingqing Street? Okay, teacher, Qingqing. Okay, got it. This is Edison 7581. Hello? Yes, we're over there on Qingqing Street. We're basically the main office of Quinine. All of our investment advisors are based at the headquarters here. How can we find out about your in-person seminar schedule? Actually, each teacher's schedule is different. Some people talk about US stocks, some talk about industries, and some talk about Taiwan stocks. Some cover everything. So usually when I go, if I get invited to give a talk, whether it's about Taiwan stocks or US stocks, I'll always let everyone know in advance. If I know ahead of time, I usually announce it early during my live streams, no matter if it's in the north, central, or south. I just want to keep everyone informed. As for the other teachers, since they each have their own talks, you'll need to check with each branch office. For example, if you're at the Zhongsao branch in Taipei, you should check in with them from time to time, or ask a branch in Taichung, for instance. If you're one of our group's clients, you can just ask their counterstaff or the relevant sales representatives, like, hey, are there any upcoming talks about Taiwan or US stocks being held anywhere? Ask them where and about what time. Basically, if you ask the sales reps, they'll know all about it because they have all the information on these events. Sometimes the northern, southern, or even central regions might join together to host these talks. Basically, if you ask the sales reps about these events, they should more or less be able to find the information for you. They all know about it. As for me, I'm a bit different. I give talks on Taiwan stocks, and I also talk about US stocks. Usually I go there to chat, to share stories, and talk about some of my investment experiences, or things related to investing. My approach is a bit different. It's more about chatting, just having conversations with everyone. If there are any new talks, I'll let everyone know. Maybe there will be some next year. This year I've been pretty busy, especially towards the end of the year. There's just too much going on. And I have a lot of annual leave and vacation days that I haven't used up. So in November and December, I ended up turning down about 2 speaking engagements. I turned down events in the north, central, and south because I happened to be going hiking and wanted to use up my annual leave. But starting next year, there should be more. Gradually, maybe there will be 1 or 2 talks every month. Anyway, if there are any, I'll let everyone know in advance. Of course, each teacher, when they're live streaming, sometimes if they have a talk coming up, they might also share it with everyone online. Okay, that answers Edison's question. All right, moving on to China. China's 1-year and 5-year loan prime rates for December were announced today, and both rates remain unchanged. One is 3%, the other is 3.5%. As for economic data, I think next year's economic data is more important. Next year's economic data, actually tomorrow's economic data is more important because it includes things like Taiwan's export orders, the US third quarter GDP, personal consumption expenditures, and the third quarter core PCE. There are also subcategories like durable goods orders and monthly rates, all of which will be released tomorrow. All right, so on Thursday, we have the U.S. weekly initial jobless claims and crude oil inventories. And at that time, the initial jobless claims will be more important. As for the 25th and 26th, basically it's going to be pretty quiet. No major data releases. Also, the U.S. stock market will be closed on the 25th for Christmas. So the most important day this week will be tomorrow, with a lot of data being released. There will be a lot of data coming out tomorrow. But if you ask whether that data is really important, I'd say its importance is about 70%. It's about 70% important. Not as crucial as last week's unemployment rate, non-farm payrolls, or CPI, but it's still worth paying attention to. So tomorrow, I'll also walk everyone through the most important related economic data. This is just a preview of the relevant economic data for everyone. As for the earnings reports, those are really important. The earnings reports, so who's leading the way? It's Micron, FedEx, and Nike. In a bit, I'll share some updates on the earnings reports for Micron, FedEx, and Nike since they just released their results in the past couple of days. Then, starting next year around the fourth quarter earnings reports will start coming out in mid-January. And when those earnings reports are released in mid-January, of course, the financial sector will be the first to announce. For example, from January 13th to the 15th, it's all financial stocks like JP Morgan, Bank of America, Goldman Sachs, Citigroup. All of them will report between the 13th and 15th. On the 16th, TSMC has its earnings call, expected. Later in January, around the 21st, 22nd, 27th, 28th, 29th, and 30th, many reports will be released, including the Magnificent Seven. Oh, companies like ASML, Boeing, and so on, even Intel, they'll all be announcing their results at the end of January. So the real wave of fourth quarter earnings reports will start rolling out from January 13th. Starting from January 13th next year, we'll walk you through everything, from JD.com and major A shares to the most important blue chip A shares, and finally to the Magnificent Seven, all the way through to the end of January. This is just a preview of the earnings season for everyone. All right, so what else was asked? Someone asked, how does the teacher view the impact of Japan raising interest rates on the interaction with carry trades? The carry trade is basically, what do you call it? What's the term? That kind of trading, right? I remember the Chinese term, but I also remember the English one. It's that kind of interest rate differential trading, right? Or something like that. I remember the English, but forgot what it's called in Chinese. Anyway, basically, do y'all remember, I think it was around 2024 or so, wasn't it? At that time, the yen kept appreciating, right? The yen was getting stronger and the US dollar was cutting interest rates. At that time, it triggered a lot of pressure to unwind positions to close out trades. I remember back then. Japanese and US stocks both took a big hit, right? That happened not too long ago. Now you're saying that this time Japan is raising rates again. Japan is hiking rates. If I remember correctly, just last week, they raised rates from 0.5% up by 25 basis points to 0.75%. So now the market is worried again, thinking, will there be another round of carry trades? And will that lead to what's called unwinding pressure? Why does a rate hike in Japan and a rate cut in the US create this so-called carry trade unwinding pressure? Let me quickly and simply explain this to everyone. Just a quick crash course. Japan originally had very low interest rates, and previously even had negative interest rates. Because interest rates in Japan are so low, what do a lot of investors do? What do? They go and borrow money from Japan. They borrow money in Japan because the interest rates there are low. After borrowing money in Japan, what do? They take that money and invest it in the United States. Because US interest rates, for example, let me give you an example. US interest rates used to be around 4%, nearly 4.5%, almost 5%. Okay, let me use round numbers. If you borrow at zero interest in Japan capital funds, if you borrow money in Japan, it's really cheap, maybe 0.5%, or even basically free, really cheap anyway, under 0.5%. You borrow cheap funds, and then what do you do with that money? You invest it in the US and earn 5% interest. So logically, you're making a sure profit because it's basically a risk-free rate. You're earning 5%. So you borrow at a low rate, invest in something with a high rate, and pocket the 5% difference. So what does forced liquidation mean? Or what does it look like when everyone rushes to close their positions? It's because the Bank of Japan is now raising interest rates, which means the cost of borrowing in Japan is going up. Okay, so borrowing costs are rising, and at the same time, the US is cutting interest rates. So the interest you earn in the US is going down. Originally, you can make 5% profit. Let me give you an example. If Japan raises its rate to 1% and the US lowers its rate to 3%, so you borrow money at 1% interest and invest it at 3%, you're only making a 2% profit. When the central bank, the Bank of Japan, hasn't raised interest rates yet, and the US Federal Reserve hasn't cut rates yet, you can make a 5% profit. So what this means is, as the yen keeps raising rates and the US keeps cutting rates, this interest rate spread, the profit you originally locked in, what happens to it? The profit decreases. So what happens if you act early? It triggers the market to quickly say sell, 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 because this interest rate arbitrage might soon become unprofitable, so people rush to redeem their money, sell what needs to be sold, and pay back their loans as soon as possible. So what does this cause? It leads to a tightening of capital flows. At this point, both the stock market and the foreign exchange market will experience relatively large fluctuations. So you might ask, will this kind of arbitrage trading happen again with Japan's interest rate hike this time? Honestly, I think the chances are pretty slim this time around. Why is that? Why? Well, let me put it this way. Have you all seen that movie, or rather that animated series? There's a Japanese anime called Saint Seiya. I always like to use this as an example. In Saint Seiya, there are characters like Shiryu and others. If you're around my age, you probably watched Saint Seiya back in middle school. Anyway, it's just, well, I don't really know how to describe it, but it's an animated character. It's actually pretty good. He said that as long as you use the same move on him, if you use it on him, maybe the first time it works and you can attack him. But if you keep using the same move on the same Saint Seiya, you lose that attack effect. So it's the same thing with the carry trade. It happened a few years ago and caused a big drop in the stock market. Everyone knows about the volatility in the Forex market and what happened back then. So when everyone is aware of this kind of situation, if the same scenario starts to play out again, a lot of people will take the necessary precautions and hedge their risks. So will the current interest rate hike by the Japanese yen trigger another round of carry trades and cause the stock market to crash again? Honestly, I think the chances of that happening are pretty low right now. The chances are relatively small. It's just like the dot-com bubble in 2000, or even the collapse of Lehman Brothers in 2008. These things have all happened before, even including events like what happened in 2020 and 2021. These so-called crises have already occurred in the past. When these things happen, the impact is basically lower. Why? Because markets all over the world will take precautions. People will try to get out early, what we call the Mrs. Watanabe phenomenon in Chinese. Okay, thank you all for letting me add this point. So this is my response to what Edison was talking about regarding this issue. Now, moving on to the financial report section, let's quickly talk about some industry news. To answer a question, someone mentioned Tony61757 and asked which hotel doesn't pay dividends. Well, it's actually paying dividends. It's paying dividends now, but the one I just mentioned is Zhongtian Hotel. Zhongtian Hotel, not Zhongtian Store, it's Zhongtian Hotel. Anyway, whether or not you've ever stayed at that hotel, you can go check it out. Even if you haven't stayed there before, you can go and experience it for yourself, because I think the room facilities are pretty good. Honestly, the room facilities are quite nice. But aside from that, I just feel like the cost-performance ratio isn't that great for the others. That's about it. Of course, I stayed at quite a few of these dividend-paying hotels. There are a lot of hotels, way too many to list. And of course, we don't have any sponsored content here. So how should I put it? We're open to sponsorships. Hotels are welcome to sponsor us, really. Now, moving on to the next question. The US Federal Trade Commission, the FTC, said it has approved Intel's $5 billion investment. This is something that happened before September. The US government has investments, and SoftBank has investments too. So now, regarding NVIDIA's investment, they're saying that it does not violate antitrust laws. It does not violate the Sherman Act. Also, the US Department of Commerce will start allowing H200 chips to be exported to China. They're expected to do an evaluation over the next 30 days. As for this news, in my opinion, whether this will have a big impact or really help the stock price, I think it's just so-so. Let's look at it rationally. Why? First, NVIDIA is investing in Intel mainly to support the so-called US semiconductor localization initiative pushed by Trump. Okay, so this is all part of the US effort to localize and domestically produce semiconductors. That's why NVIDIA, SoftBank, and even the US government are all investing in Intel. So honestly, if this goes through, who benefits the most? It's Intel, not NVIDIA. It's Intel who stands to gain. Okay, because Intel is the one being invested in. So now Intel has a lot of big investors, 3 major backers. So for Intel, in the long run, at least their cash flow won't be under too much pressure. With wealthy backers supporting them, it's definitely a plus for Intel. But for NVIDIA, you might ask, does investing in Intel mean that the future development of GPUs and CPUs will get even better or something like that? I actually think it's just so-so. If you really compare, Intel comes out better. As for the US Department of Commerce saying that the H20 needs an export license to China, is this good for NVIDIA? Well, it does help NVIDIA to some extent, because if China is willing to accept the H20, or whether it's the H100 or H200, If these chips, if Chinese companies like Alibaba, Tencent, Baidu, and others are willing to use them, then of course it will help Nvidia's revenue to some extent. It will definitely contribute a portion to their earnings, but it still comes back to the same old saying. Honestly, both the US and China are now aiming for localization and domestic production of semiconductor AI chips. So even if the H100 or H200 really gets relaxed restrictions for China, and China is actually willing to pay for it, are they really willing to buy it? Could it be that China, under so-called national security concerns, might also refuse to import Nvidia's chips? Yeah, because that's what they're doing right now. Now they're saying that Nvidia's chips have backdoor software, that there's backdoor software that could leak some information out. China is also trying to block Nvidia's chips now. But do you think China can completely block them? No, because honestly, China is still developing AI and still really needs Nvidia's expertise. This is just a fact, since their own domestic chips aren't that advanced yet. Okay, but if you look at the long run, do you really think China will keep using so-called next generation or lower-end chips forever? No, because eventually companies like Baidu and Alibaba will develop their own domestic chips and so on. It's just a matter of waiting until their chips are fully developed. When their chips are even better than the H100 or H200, they simply won't buy Nvidia's chips anymore. Who will they buy from? They'll go for Nvidia's or AMD's higher-end chips. Of course, at that point, it will depend on whether Trump is willing to allow even more high-end products than the H200 to be exported. At that point, Trump is unwilling to approve it, so he only allows the export of relatively low-end products like the H100 and H200 to China. That's basically how it is. So all I can say is, if the Commerce Department eventually relaxes the export restrictions on the H200, then yes, it would help Nvidia's revenue. It would be beneficial. But will the help be huge, really huge? No, because it depends on whether China wants it or not. In the short term, China will want it, but in the long run, I do not think they will necessarily want it. So to answer the question, we will just have to wait and see. Anyway, both the US and China are now focusing on domestic semiconductors, so last week was pretty good for me. I was up nearly 4%. Of course, as for this line, I think the 50-day moving average, if it can really hold above the 50-day moving average, then that's a different story. But if it still can't break above the 50-day moving average, just treat it as a short-term fluctuation, and that's enough. Now, as for Nike, I don't know if any of you have worn Nike shoes, Nike clothes, Nike hats, all sorts of Nike stuff. So about Nike products? Well, like I always say, everyone has their own preferences when it comes to sports gear, and the experience of using them is different for each person. As for my own experience with Nike, honestly, I haven't found it to be that great. Why haven't I found it that great? Because, well, every time I buy a pair of Nike sneakers, whether they're casual shoes or athletic shoes, after I wear them for a while, like every day for about half a year, I start to notice the soles getting damaged or even splitting open. Sometimes they crack, or the wear and tear happens faster than with other brands of sneakers. Of course, some people say, well, that's because Nike uses eco-friendly materials or whatever, but honestly, I don't really know. As a consumer, I just want to buy a pair of shoes that are durable, comfortable, safe, and look good. I think Nike shoes look pretty stylish, but as for their durability, after buying them a few times, I feel like they're just not durable enough for me. After about half a year or even less, problems start to show up. If you put the shoes in the washing machine to wash them, after washing, you might find that you put in one pair, but when you take them out, it looks like you have two pairs. Why? Because the sole and the upper part of the shoes separate. They basically come apart. So you put in one pair, but you get two pairs out. That's pretty wild. It's like Doraemon's magic pocket, but not in a good way. The soles just come off after washing. So when it comes to Nike, some people might like Nike, and the brand itself is pretty good, but in terms of quality, I just think it's so-so. As for Nike's financial report, their Q4 earnings were actually not bad. Revenue was $12.4 billion, up 1% year over year, which met expectations. North America grew by 9%. Europe, Middle East, and Africa grew by 3%, but the Chinese market dropped sharply by 17%. EPS declined 32% year over year. Even though that was expected, it's still a 32% drop. The most important thing is that Nike said, what did they say? They said that the impact of tariffs and clearing out inventory affected profits. So gross margin dropped by 3%, coming down to 40.6%. And the key point is that their CDO directly stated that the company is currently in the middle stage of recovery. It's not at the beginning and it's not at the end either. It's in the middle, which means they're still in progress. He said the company is still far from fully unleashing their potential. So their own CEO is saying that they still have a long way to go before they can truly reach their full strength. Okay, so in the short term, we can only say that Nike's Q4 financial report was better than expected. But honestly, its annual decline of 32% and the downturn in the Chinese market are pretty serious issues. So in the short term, I think its profitability still hasn't escaped its slump. The company is still stuck in the mire. That's why in terms of stock price, last Friday it plunged 10% in one go, breaking through 3 moving averages. The monthly, quarterly, and 200-day moving averages all collapsed. It broke through and even hit a new low for this cycle. A new cycle low. So if you have Nike stock in your portfolio, you should pay close attention. Even though they said their Black Friday sales were pretty good, from a technical perspective and looking at the financial report, things still don't seem that great. It doesn't look too good, huh? In the short term, I think it might still need some time to consolidate, and it won't recover that quickly. Charles 1698 asks if we can look forward to a Christmas rally. I think as of now, yes, we can still look forward to it. Whether it's before or after Christmas, or even in the first 1 or 2 trading days after New Year's, overall, looking at history, we've talked about the Christmas rally before. Christmas, the 5 trading days before Christmas. Some people call it the Santa 5, and that including the 2 trading days after New Year's. No matter how many trading days you count. Basically, it's the Christmas period. Around this time, the stock market usually doesn't do too badly. It generally holds up pretty well. Someone mentioned that the hotel looks pretty good. Very new. Yeah, it's really new. Honestly, the hotel is quite nice. I was attracted by how good it looks from the outside. So I went to check it out for a night, because honestly, it's not cheap to stay there. It's not cheap for a night. So I thought, hey, since I had some time off last week, I'd give it a try. I went there full of anticipation, but the experience wasn't as great as I'd hoped. So I didn't really get to fully relax last week, and I'm still pretty tired this week. Besides being tired, this week, apart from the live stream, we also have that new thing on Fridays, the Yuanta Weekend Report, right? Every Friday afternoon. Every Friday afternoon, there's also a live stream, a short 3 to 5 minutes, mainly focusing on some things about the Taiwan stock market, like what you need to pay attention to for the Taiwan stock market next week, what key points there are, what sectors to watch, that kind of thing. And this week, well, this Friday, I'll be the one talking. So basically, I'll be the one presenting this Friday. In the afternoon, there's the weekly Taiwan stock market report, and I'll also be doing the Goodnight Spring Festival segment in the evening. So this week will be a bit busier. But anyway, just want to thank everyone for supporting our show and for your continued support. If you have any investment questions, feel free to reach out and discuss with us as always. FedEx Q4 earnings beat expectations, raising full-year revenue and EPS outlook. Full-year revenue growth expected 5 to 6%. Full-year EPS expected between 17.80 and 19, and upward revision. So overall, FedEx's earnings report was pretty good. Nike's was weaker, but FedEx did well. Last week, after opening lower, FedEx rebounded and formed a strong bullish candlestick, even closing above the 20-day moving average, with a slight gain of 0.58%. Overall, as long as it can hold above the 20-day moving average, FedEx's trend looks solid both technically and fundamentally, with no major issues. Finally, let me wrap up with this. Everyone should have heard by now that Micron's earnings report last week was really good. Not just good, but excellent. Their fourth quarter earnings met expectations, and they also announced that for next year, in 2026, all of their HBM high bandwidth memory products are completely sold out. So you can imagine what that means. Not only are they sold out, but they also said that next year, in the first quarter, their revenue and EPS will see significant growth, and their capital support will increase from $18.1 billion to $20 billion. So this really means just one thing, which is that the current development of AI is still going very strong. Yes, of course. Over the past month, we've seen a lot of market news telling everyone that AI might be in a bubble, with all sorts of rumors about an AI bubble going around. For example, Oracle CDS spiked. Oracle's cash flow is negative $10 billion, and it seems like they're almost running out of liquidity. Then Broadcom's earnings were pretty good, but Broadcom said their profit margins have narrowed. Their own CEO said so. So in this kind of situation, when AI has risen to a certain level, growing steadily from its early stages, as it keeps developing and its valuation gets a bit high, or when there's even a slight disturbance, the market will inevitably amplify it. They'll magnify the negative news and then use that to scrutinize each company's financial reports to see if they really match up to those valuations and growth expectations. This is inevitable. But as for the long-term stability of these company structures, I think this actually works in their favor. This is actually a positive, and it also means that the market's corrections after big gains are likely to be healthier. So I still see this as good news overall. As for Micron's earnings report, I think it was extremely good. It basically tells everyone one thing. There's no bubble in AI right now, and AI is still going strong, which is why the stock price hit a new all-time high. So looking at the big picture, I think this current wave of AI The wave of AI adoption and its widespread use will in fact remain extremely active over the next couple of years. So in the next 2 years, AI will still be a very hot topic, which means that when it comes to your holdings or investments, AI should still be your main focus and the core of your investment strategy. If you make it your main focus, you'll have a better chance of profit. The US stock market, Newmont 2.9% before market open, Micron Technology 2.85%, hits new highs. SanDisk is also up 2.56%. In addition, Albemarle and Supermicro Computer are both up more than 2% in pre-market trading. As for A shares, there's also a rebound after previous declines, with a 2% increase before the market opens. Intel and Nvidia are both up about 1.5% as well. As for the companies that are down, only Hanway United International dropped 3.57% in pre-market trading. Others, like Ball Corporation and Tyson Foods, aren't really significant. Their declines are minor, around 0.5% or so. So overall, looking at the US stock market and pre-market trading, the major tech companies that are up today are still acting as leaders. So if tech stocks, especially those leading in AI, are performing well, I think the US stock market, whether it's the NASDAQ or the Philadelphia Semiconductor Index, will still be relatively strong. The upward trend remains unchanged for now. But I still want to remind everyone, just a reminder, US stocks keep hitting new highs, and so do Taiwan stocks, right? They've both been doing pretty well, performing nicely. Of course, you have to remember that every time there's a new high, you should consider selling once, and then when the price pulls back and comes close to the moving average, you can buy in at a lower level. Indexes and individual stocks hitting new highs both indicate that the bull market trend hasn't changed for now. The bullish structure hasn't changed, but what you need to be careful about is that every time there's a new high, there will be some short-term profit-taking pressure. On the technical and market sentiment side, you'll encounter a short-term correction, and the scale of this adjustment can vary. It could be minor or more significant. If you buy the wrong company or the wrong stock, even during a minor pullback of just 3 to 8%, some companies might drop anywhere from 15 to 30%. So when you're trading, you really need to be extra careful with your risk management. So what about the Dow Jones Index? It's still bullish, unchanged. Monthly and quarterly moving averages? Last Friday, it surged nearly 3%, barely holding above moving averages. Caution is advised. In the short term, there will still be some pressure from short-term bulls taking profits around Christmas or before the new year, so you need to pay a bit of attention to that. As for the Magnificent 7 index, it's also staying above the monthly and quarterly moving averages. Overall, it remains a very important indicator and a leader in market confidence, so everyone should definitely keep an eye on it. Alright, that's it for today. We've talked for 46 minutes. Pretty good, considering that even though it's Christmas and there isn't much data being released, it still took 46 minutes to cover everything. When class is over, remember to like, subscribe, and share for us. If you have any investment questions, feel free to leave me a comment. Lastly, I wish everyone smooth trading. See you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.